Hello and thanks for joining us for this week's fastest 4 minutes in finance. I'm Scott Inman. Every sports fan has said it at one time or another. We've all been watching our favorite team get off to a big lead early in the game. Whatever game that is, whether it's a 4-run lead in baseball in the first inning, a 3-touchdown lead in the first quarter of a football game, or a 15-point lead in the first half of a basketball game, as a fan, you think to yourself, it's still early. There's a lot of time on the clock or a lot of innings left to be played. And I thought of this week as investors cheered a lower than expected inflation report and the hope of a reduction in Trump tariffs. Stocks took off after the consumer price index rose just 2.3% year over year, its slowest pace since early 2021. And that data was compounded by a temporary trade deal with China. The two countries paused their tariffs on each other, or the bigger tariffs on each other, for 90 days. The S&P 500 index jumped more than 4% the first few days of the week, and the tech-heavy NASDAQ shot up more than 6%. That brought both indexes back to near even year to date. It was an interesting pairing of news because one of the biggest fears of higher tariffs is higher prices, and so far that hasn't happened. But as we said, it's early. The Trump administration lowered tariffs on China during the 90-day pause from 145% to 30% as the two countries worked toward a long-term agreement, and China responded by bringing down its retaliatory tariff on U.S. goods from 125% to 10%. LPL research tells us the U.S. effective tariff rate is now down to 13.1% from 22.8%. That certainly is worth cheering about, but the reality is that any increase in tariffs is not likely to have been felt much yet. MSN reports that U.S. companies stocked up on foreign goods earlier this year to get in front of those tariffs. Morgan Stanley's chief economist told the Wall Street Journal, quote, "What's sitting on store shelves today is based on agreements that were made 2 to 3 months ago. Tariffs on raw materials won't be felt at the consumer level until companies make something with them and put it up for sale. Think new homes. The Trump tariffs will still likely send a shock to the system. Many companies are warning their stockholders that price hikes are coming. Of course, it could be a sudden shock followed by stabilization. In other words, the higher prices could hit all at once, but that could produce slower consumer demand, keeping prices in check moving forward. The bottom line is, it's still early. We don't know what the long-term trade policy will ultimately be. We don't know its long-term effect on consumer prices, but what we do know is anyone who has bet long-term against the U.S. economy has lost. Things are never as good or as bad as they may seem. As an investor, we cannot afford to get too high or too low emotionally on our path to meeting our long-term goals.
Want to become smarter financially in 4 minutes or less? Sign up at fastest4.com to get insights and updates like this delivered to your inbox weekly.